So if you recall from 2 weeks ago, so that's from session 50, I talked to you about the breadth thrust that's using the S&P 500 above the 50-day average. So the ticker symbol is F5FI. So F5FI. So that is the ticker symbol that I follow. And I show you the case in 201819. So that is one. So the key of that is really we need the breadth thrust to go into the oversold level. So that's oversold while we get a deep sell-off, and then followed by a very strong rally up and until it hit the very overbought level at about 90. So 10 and 90 are the critical level. And we get that in the 2018 sell-off. That's the Christmas sell-off. And we get that in the COVID sell-off. So that's the March bottom. And then eventually we just get the rally and went into the overbought. So the breadth thrust is showing that a ton of the stocks are participating the bull run. So that's the run. And that really actually marked the bottom here and here. So at the moment, 2 weeks ago, we are somewhere around 76.5, while we are having a bit of the rally at about 41.30. Okay, so next is also another recap. That's from 2016. So 2016, we also almost hit the oversold level at about 10. So that coincides with the S&P 500 at about 1,800, and subsequently we get an overbought level here. So that actually as a valid confirmation. So mark the bottom in 2016, and in 2011 we also get that. Although the path is not as smooth as the previous case that I show you, because they are kind of a zigzag way like this. So that's also reflected in S&P 500. So that's 2011, but ultimately we get an oversold at 10, and we got a rally to hit the 90 level, and that actually marked the bottom in 2011 as well. And lastly, we have that in the global financial crisis 2009 here, and that actually marked the bottom. So from the oversold all the way go into overbought. And also 2010 as well, oversold 10, overbought 90. So that marked the market bottom in 2010 as well. So what's going on now? So let's quickly take a look right now. So based on the chart, as you can see it right here, here's the latest reading. We are right at this 92 level. Okay, so we had that oversold level. It should be in June. There's a really oversold level below 10 and all the way back to 90. Okay, so I think that really acted as a confirmation just based on the past, I think, 6 events that I show you. So that could really mark the bottom of the market back in June 2022. So I think this is really significant because whenever we have the market breadth that's above 50-day with over 90% of the stocks participate. So I think this is really an encouraging sign for the bull, at least for now. So that could really mark the market bottom just based on the breadth thrust indicator alone. But I think the most important part is not really to guess about the market bottom, but rather to trade the stocks that we would like to participate, because those could be the outperforming stocks that could turn out to become multi-baggers in the future when the real bull run gets started. So let's talk about the market. Okay, I believe at the moment Russell is actually outperforming. So I think that also reflected in a lot of the small cap stock as well. A lot of them are just rally up. So I think Russell 2000 is really showing some kind of the outperforming. So followed by Nasdaq is quite good as well, quite strong, because if you really compare the swing high, so this is just a breakout, right? If you compare the swing high for Nasdaq, that is actually the breakout happened quite a while ago, maybe 2 weeks ago here. So while the breakout for S&P is just about 3 days ago, and for the Russell, at least is just happening maybe on Tuesday. So that's actually leading up. For Dow Jones is also similar to S&P. So I will just rank them as this is really the outperforming index, followed by Nasdaq. Probably third is the S&P, 4 is just the Dow Jones. So Stan say, with the SeasonX chart you showed earlier, well, that's a good question. The SeasonX chart for the midterm election cycle has been working out very well, because I think it catch the downswing in January, and then here, and then the downswing in April as well, followed by a automatic rally in May, and eventually June that actually marks the bottom. And after that, the seasonally chart is showing something like this, if I remember correctly, until probably October. Then probably we'll have another spring, or maybe that's the last leg down, and eventually have just started the bull run. So that is actually based on the seasonally chart. So is it still valid now? I mean, how I actually use or look at the seasonally chart is not so much about the structure. because we really want to just focus about the swing. So if we get a swing up, so for example, like if July is actually the swing up, then I think that's great. But so far, there's definitely a swing down. So we still want to anticipate there will be a swing down. And I think if you look at the chart here, a swing down is definitely pending. So a lot of people speculating here. So that is actually the axis area or axis line, because that really is quite an important area, because there are a ton of the volatility here. So tested first time, second time, third time, fourth time breakdown, and then now the fifth time, and then we see that there's breakout. Okay, so that is actually an encouraging sign for the bull, because when we expect there could be a significant reaction, a meaningful reaction, that will be somewhere around here. All right, a reaction. But did it come? No, not yet. But eventually, we still would like to see a reaction, because this is kind of a runaway rally. If you have not participating, I think it will be quite hard for you to find an entry because of the overbought condition. So when you have this kind of the consolidation, and based on my last Sunday analysis, I mentioned that there could be more upside ahead, because really in terms of the supply level, we don't really see trending supply in terms of the price action. Look at how mild is the pullback. So this is very shallow type of a pullback. So this is really, really healthy. And despite as much as I would like to see a meaningful pullback so that it could just consolidate some more, and then I think that could really form a very nice handle to add on some more positions. So I think that would be a very healthy pullback for the stocks as well. But so far, we haven't seen it some suspicious activity from the volume and from the price action yet. So in terms of last week action, so what exactly is happening? Really, that is one, two, yeah, that's from Monday. So Monday there is rejection, but not that scary. So here's a supply. So the level of supply is not that high. It's not as high as like here or even those kind of the spread like this. So in terms of spread, it's just a mediocre normal price spread. So I think that is not really a threatening price action. And next day, Tuesday, is just even better. It's just kind of a decreasing volume, decreasing supply. It's all acted almost as a test, and then followed by a breakout. So from there on is still runaway. So back to your question, is it still valid? I mean, from the Season X chart, from July onwards, there should be a consolidation. So we still want to bear that in mind, okay, a consolidation. So my question now would be, would the consolidation be an upsloping type? Would that become upsloping? Or would that still be a lot of mess, like something like this, going nowhere and chop around, maybe horizontal or maybe upsloping? So far, we still can assume, well, there could be upsloping type of the consolidation. So it means that we still want to see some kind of the pullback. But based on the timing and based on the price reaction and also the volume, that will actually form the final confirmation, and also for the reference of the execution as well. So we can't really just based on the seasonally chart. The seasonally chart is just a guide for us to anticipate some kind of the structure that might form. Maybe it still needs some form of the consolidation, or maybe there could be some kind of the volatility involved. So there is always better to just anticipate if we have some kind of the analog, because the seasonally chart is also one form of the analog, just like how I use maybe 2015, 16, or even show you the global financial crisis as an analog. So use it whenever it's working. Otherwise, so far, just based on the price action alone, we already see the breakout. So here's a level. 41, 42 is the level, and the breakout should happen. So there is a localized breakout on Wednesday. Thursday rejection. Friday is just a straight out trend day. So that is still very healthy. And last week, I also talked about this is the level that we need to watch out. So I think we still want to watch out for the level, because that is really where the selling started. So a breakdown here. So this is the selling zone, supply zone, and also in terms of the down channel, here, and now it's kind of approaching here as well. So we really want to see whether there could be a pullback, or how deep the pullback is the real question. So if indeed we get some kind of the spike here, a ton of the selling, then very similar to here, or even somewhere around here, then we just need to be very careful, because that could really see a ton of the volatility involved, and then that could be the swing that we could anticipate. But even if we get that kind of the selling, that kind of the pullback, as long as it's still kind of, okay, the first level I really want to see is 41. So 4100 is definitely the first level you need to defend. So if it breaks below, then we can expect more volatility. Then that's the next level around 39, 39.50. So that's the next level as the exercise where the previous resistance now turns support. So 41 is a very important level. So even if it just kind of keep going up thrust, tested the 44 level, temporary commitment, breakdown, have a sharp sell off. If this region 41 to 42 is still holding up, I think that is a very nice pullback. It's really for us to scale in, to add in more position for the stocks. So really need to watch the reaction based on the potential level ahead, potential resistance level, which is somewhere around 44, 43. So that these are the two levels that I'm watching. Because if you really want to talk about whether is it a really bull market started or where is a bear rally, I mean, I can tell you, what exactly is this, right? This is a Dow channel. This is a bear rally. Okay, it's a bear rally. So we haven't really entered into a bull run, a very straightforward bull run. Although I think the sentiment has improved a lot in terms of the AI data, but in terms of the structure, in terms of the chart here, this is no way a bull market. It's still a bear market. It's just a rally, a bear rally that we have been anticipated from here. So if we really want to look at it from the Wyckoff perspective, here is the potential accumulation, which I showed you I think last week. So we got a lot of the buying right here. So buying on the way down, increasing of the volume. So buying on the way down here as well, on the way down. And that is actually the automatic rally. So that is actually the selling climax, automatic rally, secondary test as a sign of weakness. But we see that there's a lot of the buying on the way down, such as there's value hunters showing up here, accumulate on the way down with a test, supply has been decreasing. Even here, there's a ton of the volatility involved. But look at this, hammer, demand tail. So a lot of the buying on the way down at this level. So that really forms a demand zone here as well. Buying on the way down. So I mentioned about we still need to see some aggressive momentum, aggressive volume means that some momentum trader actually buy on the way up. So here it is. There's a momentum trader buy on the way up, breaking out. So I think that actually fulfill some form of the criteria that I'm looking at, because I really want to see the momentum get picking up rather than a ton of the value buying, because if we only see the value buying, then you still want to consolidate here for more time. So until we see that there is the momentum buying like this that initiate the breakout, okay, momentum buying, breaking out, tested, pullback, continuation to the upside, shallow pullback suggests not much supply. So supply has been decreasing. So I think that's really a very healthy sign for the continuation of the trend of the swing, at least for now. So would that have a pullback? Of course it will have. But so far, I still haven't seen enough clue that's telling me that the market is going to pull back anytime soon. But based on a simple just resistance ahead, then this is the level that you can anticipate. 43 to 44, that's the level for the breakdown here. So that's the supply zone. So we need to see how he actually react right here. So that is the level that we can anticipate some form of the reaction. So how deep or how strong is the reaction, or how much supply will be present, we need to just look at the market. So the market will tell us for sure when the time comes, just maybe in 1 or 2 weeks time. So next week could be critical. It might just hit that in 1 bar alone or 2 bars, or maybe it could just grinding up. So there are endless possibilities. So anyway, short term, there's no signs of slowing down. I still see that it's still going to go up. So there's a level that I'm watching, 44, 43, a very logical level to anticipate some kind of a reaction. So if you put up maybe 200 MA, that could maybe be well in line with the supply zone right here. So I haven't really looked at 200 MA, but you definitely can look at that as well. All right, so the other of the indices are very similar to S&P, but apart from, I think, IWM, the Russell 2000 is still charging up. So if indeed it's going to hit 42 to 44, then I think IWM, this Russell 2000 RTY futures should really test the previous swing high. So this is a previous level, somewhere around 20, maybe 70, 60. So somewhere around here. So it should really just test that. And I think it makes a lot of sense to have a pullback, because that is really quite overextended, overbought, stretching. So something like this, that's definitely overbought, overthrow right here. Okay, in terms of volume, there's no threatening volume showing up yet. All right, so overall, short term is still going up, but we still want to see the next reaction will be the key, because if indeed there will be a lot of selling show up, then we just need to be careful and watch out and tighten the stop loss, because like Stan said about the season X chart, it's still going to consolidate some more. Dave says, when anything making money should sell and wait for re-entry. Well, okay, so that probably will bring me to my next slides. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.